Good morning, Jen Tozer, your portfolio manager here. And with the current market volatility that's going on, I thought I would take my couple minutes and tell you what my thoughts are for today, tomorrow, and the rest of the year. So let's talk about the volatility. Now, I like to present numbers as year-to-date numbers. So depending on which market you're looking at, we're probably down anywhere between 8 and 18%. But reporters like to give you the peak to trough, the trillions of dollars that are lost. This is because it's more impactful and interesting and gets more views. But when you're talking about these types of drawdowns, let's think about negative 10%. You should actually expect that in any calendar year. It's pretty common. So let's look at some of the bigger years we've seen just recently. 2018, the drawdown was negative 20%, and we finished that year on a positive note. In 2020, the drawdown was negative 35, and we finished that year on a positive note. 2022 was negative 28. So these things happen, and I know they're not fun, but what's unsettling is that they happen fast. So why do they happen fast? They happen fast because they're emotionally driven, and they happen fast because it's cheap to trade. Now let's talk about what's caused this. And we all know it's Trump. He's taken all of our trading partners and our global economy, he's thrown it through a blender. This creates uncertainty, and I consider that in the stock market sorting. So we're going through a sorting period. At least we're not going through it like we did in COVID, a stay home and don't go to work period. So we're sorting. So what do I think is going to happen between the rest of the year? Why wouldn't I just say, let's just sit this out? We knew Trump was going to cause problems. Because as fast as the market goes down, it recovers. That's the problem. And that's what happened in 2020 is a very good example. COVID wasn't over, but boy, that market recovered fast. So I'm afraid that once I'm not afraid, but I'm concerned that once there's going to be some kind of inflection point, the market's just going to go pink. So what are possible inflection points? Number one, Trump changes his mind. You have to wake up every day to figure out what's going on. So that's one. But just like this, we're going to get used to it. So as time goes by, it's going to have less impact every time he changes his mind. Number two, I think our Canadian election could be a good idea, because once we finish it, no matter what happens, he's going to be able to say, you know what, now we have a reasonable prime minister in Canada. We're going to revisit all of our trading policies that we currently have. Then the third thing is popularity. Trump loves popularity and he loves the media. And if his tariffs put him in a position where he's losing popularity, is going to be something that causes him to reconsider what's going on. So you client, when you're talking to me and you're thinking, but Jen, I'm retired. Yes, if you're retired, we planned for your income for the year so we don't get pushed around by your stock market. Jen, what about my huge tax bill? I'm sorry, I know the tax bills are huge, but you know what? We planned for that. Chances are we've put money aside. And what about the final thing? What if you say, but Jen, what about my long-term horizon? Remember, that's how you make money in the stock market. It's all about the long term. We've been through these messes before. And when you look, most of my clients have been investing for 20 years and they're probably investing for 20 more. So when you look back on this, it will be like looking back on 2018, 2020, 2022. It's going to be a blip in the chart. So I wanted you to know we're here. I want you to know we're paying attention. And if you have any questions, please give us a call.